You're watching the Mortgage Busters, and you know this show is all about paying off your mortgage at a fast rate of knots, but also preparing for retirement. Now, we've got a very special guest star this evening, and her name is Rain Liu from the Mortgage Busters. Rain, welcome to the show.
Thank you, Greg.
Now, you're replacing Adrian.
Yes, I am.
Who's doing exciting things elsewhere. Or not with us, but he's just occupied doing other things with this show. Yeah.
Yes.
So tell me about yourself.
Well, Greg, I come from a banking and finance background, and I was also working in superannuation. As you guys know, I've been brought on to help fulfill the flood of inquiries and demand that we've had through the show. Fantastic.
And in terms of what's the most popular demand for through the inquiry that we're getting through the show?
Oh, everyone wants to pay off their mortgages faster. It's like a ball and chain that's shackled around them.
It is. I love the way you just described that because it is a ball and chain.
It is, Greg. It is.
And do the banks really help?
No, the banks are only interested in making money off our clients, and they're sick of it.
Of course.
Yes.
So what can we do? I mean, we've discussed topics on this show, and paying off the mortgage quicker, but you know what I want to do, especially with yourself and on the show, and that now that you're the co-starring with myself, or co-hosting, I should say.
Yes, I am. Yeah.
Then really, let's go back to basics.
Yes, absolutely.
And that's all about paying off the mortgage as fast as possible, because really, people get complacent. They get used to the fact that they have to pay the mortgage, and it just because they get 2 statements a year, right? In general, unless they request otherwise.
Yes.
So it's sort of out of sight, out of mind. And what can we do to speed this up?
Well, Greg, one of the first things that people can do is take charge of their financial destiny and make sure that they're keeping track of what's going on with their mortgage and their finances. How many people do you know that does that, Greg?
Well, not many.
Yes.
To be honest with you, yes, correct.
Yes, and the thing
is...
Well,
other than the viewers of the Mortgage Busters show.
Well, we hope so, we hope so. But at the end of the day, no one else is going to do it for you, are they?
Correct.
Yes, and if you can have fun with it, that'll make it even easier. Say if you look at your mortgage every statement or every month or even more than that, then keep an eye on, say, lower interest rates that might be available, especially in this current climate. Also, you can have a look at whether you're doing absolutely everything you can, including setting up some offset accounts in order to help reduce the daily interest that you're paying. Do our viewers know about the offset accounts that they can create?
Pray tell me about it.
Okay.
Well, just if the viewers are watching the show.
Yes.
And we've discussed this before.
We have.
But people, they just need to be. We need to explain it again in simple terms.
We do.
Correct.
Basically, Greg, an offset account helps to reduce the daily interest that is being calculated on your mortgage. That means that if you have money sitting in there, so for example, if you have a $200,000 mortgage and you have $10,000 sitting in your offset account, it actually reduces the amount that's calculated off your mortgage by $10,000. That means that the mortgage is now calculated based on $190,000 instead of $200,000. Can you imagine?
That's a big chunk.
That is. Can you imagine how much interest that you end up saving every year just by putting your money, your change, anything that you have lying around, your savings, even in your couches. So go and look for those money, guys. Any little loose change you have in your couch, in your cookie jar, in your car, take all of it, take it to the bank and put it where? In your offset account.
Offset, yes. Of course. So, I know, and you know this as well. We both know this fact. There's people out there that actually have offset accounts and they actually don't use it. They've got a savings account somewhere with a few $1,000s in there.
Yes.
Which is really earning you pittance interest, right?
Yes.
And it should be into the mortgage on a daily, almost, hourly basis to reduce the interest because let me say this. If you borrow $200,000 from the bank, you have to pay this back. You can't.
You do.
If you borrow $200,000, you've got to pay back $200,000. But what if you in the course of the loan and the interest payments for the average loan, what the banks tell you, if they just do it the way they want you to do it, they'll pay you, or you'll pay the amount of interest plus another half again. So if your loan is $200,000,
Yes.
you'll pay back $300,000 of interest alone besides the 200. So it's that much, but another
Yes.
half again.
That's what the banks do not want you to know.
Correct,
They want to
correct.
make as much money off everyone as possible. And if you pay off your mortgage faster, then guess what? They're making less money.
Of course.
So
yes.
would our viewers rather have money in their pockets, or would they rather pay the banks?
But in a way, the banks are doing themselves an injustice, because once you pay off the mortgage on the home, the current home, you're going to use money. You're going to borrow money again for good money to invest in, in a business sense, like an investment property or shares or whatever. So in a way, it revolves around, but it becomes, it's proactive saving and paying. Yes.
Because we have two ways of paying off your mortgage faster. You can pay it off hard, or you can pay it off fast and smart. So the way to pay it off hard is to grab all your change, put in your offset account, pay off the principal as much as possible. If you get an inheritance from Aunt Bertha, put it in.
Aunt Bertha?
Aunt Bertha, put it into your mortgage. Or your aunt, your uncle, anywhere, from your grandparents, from your parents. So if those are fortunate enough to have that, then that would be a great advantage to paying off the mortgage faster. And also, not just doing that, but making sure that instead of paying the minimum monthly every month, that they could at least change it to fortnightly or weekly. Because guess what? When you do at least a fortnightly payment, you pay an extra 2 payments a year.
So can you please explain that?
Yes, absolutely. So within a year, there are 12 months, as we all know. And
12 months, yes,
12 months.
I get that. Yep.
But people assume that in every month there is exactly 4 weeks, but there isn't. Every 4 weeks is 28 days, and every month has 28 to 31 days. So all those days add up to another month if you're going according to a 4-week calendar. So in a 52-week year, you would actually see a 13-month year calendar rather than a 12-month calendar. Can you believe that?
Well, you know what? You don't realise it.
No, people don't.
And if it's out of sight, it's out of mind. You don't actually sneak in another payment, but it's
two.
Two. Yeah,
Two payments. You get to sneak in another 2.
That,
yeah, that's another 2 payments that everyone that watches the show can at least get in, and every little payment helps to get down that mortgage faster, pay off the principal, pay off the interest, make sure that you actually monitor what is happening with your mortgage. That's the most important thing.
And you said that with such emphasis. We need to go to a break.
Yes.
You're watching the Mortgage Busters Show. We're with Ray and Lou from the Mortgage Busters Show, and we'll be back straight after the break. You're watching the Mortgage Busters Show, and we're back with Rain Lou, our co-host of the Mortgage Busters Show. Actually, I should say the new co-host of the Mortgage Busters Show. Welcome back, Rain.
Thank you, Greg.
So, we were discussing the offset account.
Yes, we were. What we didn't elaborate on is that everyone needs to put their offset account into work by putting all their salary into it. All their funds, that every little bit of dollars they have, need to go into the offset account.
So it actually, it says what it means, offset.
Correct.
So you're
correct.
offsetting the interest, which means
Absolutely.
The less amount of interest that you can pay, the better off you are.
Absolutely.
Okay.
And it needs to stay in the offset account. That means every dollar needs to stay in the offset account for as long as possible. And then they can pay all their bills out of it. When I say they, all of our viewers.
Yeah, of course.
Yes.
Of course. And you know what? That's really exciting.
It is. It is.
Because, why shouldn't we be excited about paying off the mortgage?
Yes, absolutely. Why couldn't we be excited and have fun with our finances?
I don't know if I've told this story before. I'm not sure if I've done this on camera, but
yeah.
I was at the bank and I was doing, have I told you this story?
I'm not sure.
Anyway, I was at the bank and there was a person in front of me and they went to the teller and I was in earshot.
Oh,
right?
okay.
And the teller was there and this customer said to the teller, this is our final payment. This is our last payment about the mortgage, for the mortgage.
Right.
And the teller just went, oh, okay. But there was no reaction.
Okay.
She said, oh, that's really good. And there was no reaction. I'm thinking, where's the fanfare? Where's the streamers and the balloons? And I'm thinking, I couldn't help myself. As she walked away, I stopped her, I shook hands with her, and I said, congratulations, you've done a great thing,
Absolutely.
And, there's years of sweat and labour that's gone behind
so much
that.
hard work. I mean, there is so much dollars that all the viewers of our show had to work so hard to get
Correct.
in order, and after-tax dollars too, in order to pay off their mortgage.
After-tax dollars.
After-tax.
Right on the head. Hey.
Absolutely.
Because, why shouldn't we get excited about this event of paying off the mortgage? Because it's such a hard slog. It becomes, out of sight, out of mind, and we just think, okay, we just got to deal with it, and we just have to suffer the pain.
Hopefully, our viewers are not going to do that.
No way. That's why you're here.
Yeah,
yes.
That's why we are here.
Yes, exactly.
Greg.
Yes.
We need to emphasize to our viewers to make sure they take charge of the finances. They monitor it regularly. They make sure that they can get the best interest rates possible.
Yes.
If they need to refinance or debt consolidate, then they do that. And also make sure that they have that offset account. Every single dollar needs to go in and out of that account in order to save them interest being calculated daily.
Daily. And that's the trick, isn't
yes,
it?
that
really?
is the trick.
Yeah.
Yes.
Okay, so we're not talking about loose change, we are talking about
every single dollar.
Every cent can help pay this mortgage off at a fast rate of knots, which is what we're talking about.
Yes, but that's only working it hard though, Greg. We're not talking about working it smart. We started talking about it earlier, but for our viewers who want a more advanced strategy than just slogging at it and working really hard, just throwing everything they can at it.
All right, so talk to me more about this.
Great. So there are two kinds of debt, Greg. There's good debt and then there's bad debt. Now, good debt is generally what people do when they actually borrow money from the banks in order to buy their house, because the house will go up in value, and if they decide to rent the property out later, they'll get some money back, some cash flow from it. That's called good debt.
But even, I don't want to stop you, but
no problem.
Even if it doesn't go up in value, there's, if you do it the right way, you're streets ahead.
Oh.
As a new investment in property, which is you're basically talking about a business now. Yeah.
Well, that's working it smart.
So
again,
sorry to cut you off.
That's okay. So good debt basically is money that you borrow to make you money, but bad debt is money that you spend, like a holiday, on cars, personal loans.
Those pesky cars.
And then boats and credit cards. Yeah. Australians love credit cards. We blow so much money just spending it on anything under the sun that we forget to take care of ourselves and plan for our future. Now that's a real crying shame, isn't it, Greg?
It is. It really is, yeah.
So how can people work smart in order to pay off their mortgage faster? One of the first things they need to do is reduce all their debts. Their mountains of personal, their car loans, their boat loans, all these loans, any other loans, credit cards, everything. They need to reduce it down to zero, then toss every dollar they can back into the mortgage, work it hard, but then think about working it smart. Because if they work it smart, then they'll start thinking about how they can leverage. Do people know what leverage means?
Well, pray tell.
Okay.
You can elaborate.
Great. Yep. Leveraging means that for every dollar that you have, you can borrow this much more money on top of it in order to what? Make more money.
So good debt.
Good debt.
Good debt.
Exactly.
Yep.
Good debt. That's another way that our viewers can work their mortgages smarter. So if they invest in, say, a positive cash flow scenario or vehicle, they can actually feed that money back into their mortgages and save themselves tax in the process. Who likes paying the tax, man?
I know. It's amazing. And it's not a secret formula. It's not smoke and mirrors. It's pretty basic maths, or just
this information is actually available everywhere. It's just that if you do not know where to look, it's like looking in a needle within a haystack, but of other needles.
Yes, I like that.
Yes? So that's why we're here with the show.
So you get jabbed in the thigh and you get jabbed in the
ouch,
yellow.
Ouch. Yes, it's a bit like that with a mortgage. That's why I compared it to a ball and chain earlier, because it's so painful to be lugging this weight around and then looking towards the horizon of retirement and knowing you're not going to have enough. And if you do not have enough, guess what? You're in trouble.
And when that day comes, if you don't have enough, it's too late. There's
It
no
is.
other recourse.
It
Pretty much,
is.
really. you know.
Yes, I mean you can start doing something there and then,
Yes.
but then you're taking
Don't
more risk.
procrastinate, correct.
Do not procrastinate. There's always the best time to do anything and everything is always now. Isn't that right,
Correct,
Greg?
correct.
The best time to plan for your retirement and pay off your mortgage is when? Now. The best time to take charge of your financial destiny.
Beautiful. I love the way you said that. We're about to go to a break, but let me just say
Sure.
this because you did mention, other debt, bad debt like cars, credit cards, blah blah blah.
Yes.
Are you an exponent of consolidation?
I am an exponent of consolidation.
All right.
but
Let me
the-
just let's go to. I'll
Sure.
refer to your answer after
Okay.
the break. All right.
Yes.
You're watching the Mortgage Busters show with our new co-host Rain Liu. We'll see you on the other side of the break. You're watching the Mortgage Busters show, and we're back with Rain Liu from the Mortgage Busters show. Rain.
Greg.
So, we're talking about positive cash flow scenarios.
Yes, we were. That's one of the ways that our viewers can pay off their mortgages smarter instead of just doing it hard. And chunking down, paying it as fast as possible is one thing.
Yeah, chunking down. What does that mean?
Yes, sorry, Greg. Chunking down means that taking every bit of money that you have. So if you have $5,000 for inheritance, you pay it off in one fell swoop straight where? Into your mortgage. That's working it harder. But then there's another way to pay off your mortgage faster, and that's working it smart. And how we do that is through these positive cash flow vehicles and scenarios that you've spoken about, and you've already given our viewers a hint of what it can involve. And that usually involves investment. What? What kind of investment?
Pray tell.
Pray tell? Okay, so we have some common investments like putting in the bank, getting a deposit that earns just ahead of inflation in terms of bank rates. You can buy shares, trade shares on the market, local, national, CFD options and derivatives. It's another
So basically shares.
shares,
Yeah.
just shares. And the third thing is property. Australians love property because it's bricks and mortar that we can see, we can feel. For our viewers that already own their own home, they know what it's about, don't they?
Just property performs and performs
Absolutely.
amazingly well.
Absolutely. And especially in Australia, property actually doubles every 7 to 10 years.
Correct.
Can you imagine if you buy your house for $300,000, 7 to 10 years later, it will be $600,000.
Correct.
And then that keeps
Well,
happening.
Time will tell, but this is what happens. You
Yes.
can look at things historically, but it's very
Yes.
hard to predict in the future or to extrapolate into the future.
Yes, Greg.
So I know I bought my first property and it was $90-something thousand.
Wow.
And that was a big stretch for me, right?
Yes, I can imagine.
And I'm thinking, and now I look back on it, and it's not even a bungalow. It's not even a garage, So
Yes.
that's the thing. It's life goes on. The economy continues on.
Yes.
Inflation goes up. Blah blah blah. You've got to try to stay ahead of inflation.
Absolutely.
Which you've talked already about that.
Yes.
But you've just got to do what you can do at the time.
Yes, you do, but you've even got to do more than that. You've got to plan ahead towards your future. Because if you don't, no one else will do it for you.
Correct.
And when it comes to property, who else is there? Is someone going to hand you everything on a silver platter? Or do you have to go and do it yourself?
Well, the government will do that.
Really?
The banks will do that.
Really?
Absolutely.
No.
No, we're dreaming. I'm dreaming.
Yes, absolutely. And the thing about property is people are always going to need a place to live, aren't they?
Of course.
If you have your own home and you buy an investment property, that means you're actually providing a service to the community by giving places to live for people who need it. Aren't we?
Absolutely. And we'll talk more about that in the next show, which
Absolutely.
is really,
Yeah.
people struggle with a mortgage on their first home.
Yes.
If there is a second home, but let's talk about the home, the first home. People struggle as it is,
do.
and you're
Yeah.
expecting to go out and initiate another mortgage for an investment property, which you think how hard is it now, let alone to have an investment property there's another mortgage and another commitment. But it's actually the psychology needs to be around the other way.
That's
Yeah.
correct. Especially if it is positive cash flow.
Yes.
And not negative cash flow. Australians actually really love to do negative cash flow. And guess what? When you actually have to fork money out in order to keep your property, wouldn't it be better paying off your mortgage? And wouldn't it be better that if you have a positive cash flow property giving you money that comes right back into your pocket and saving you tax from the taxman? Wouldn't it be better going into your pocket and paying off your mortgage faster?
Yeah, absolutely. But you've got to do it the right way. And we've talked about this on the show previously.
Yes, that's right. You need to know where to go and who can help you, right?
Absolutely.
And also have a strategy. You can do it ad hoc. You can just wing it, fly off the seat of your pants. But at the end of the day, the more you do that, the less you know what you're doing and the more risk that you take.
Correct.
If you have someone holding your hand through the whole process, then there's someone guiding you that's been there, done that, and can tell you about all the pitfalls to avoid. Right, Greg?
Yeah, absolutely.
Yes.
So just, look, we're coming to the close of the show, but
Yes.
just, pitfalls, just one or two?
Oh, pitfalls like relying on your industry super fund to plan for a retirement for you.
So you mean like the average super fund like, I don't
Yes.
know, HBA or AMP or something like that?
AMP,
Yeah,
absolutely. Or super, those people actually take our clients' money, invest it on their behalf, and you do not know where your money is going. And guess what? If another GFC hits,
Well, they're not our clients, but our client.
our clients, our viewers, sorry,
viewers,
our
correct.
viewers.
I just want it's a bit of a technical thing, but
Excuse me?
Yeah.
If our viewers are relying on the government or their industry super fund to look after them, they might be sorely disappointed. Because
good luck.
Yeah, absolutely.
Good
Because the
luck.
government keeps raising the retirement age.
Correct.
And they're actually going to make us work until we die, for one thing. And the second thing is when they have this forced savings into super that is not within your control, you do not know where your money is going and you do not know who is managing your money.
Correct.
So what happens if another GFC or global financial crisis hits? It can wipe the value of your super no matter how much you actually have in there. That happened to some friends of mine.
It's happened to people that I know as well.
Absolutely.
And there's nothing you can do about it when it's too late.
It's heartbreaking, Greg. It's absolutely heartbreaking to hear of our viewers and the people that we know going through this, and they are living, some of them who are retired now do not qualify for the pension, and they're living on bread and water.
Yeah, I know. Hopefully it's clean water. Anyway, let's keep it on a positive note.
Yes.
Or note. We're on the pretty much the edge of the show now, the last legs of the show.
Yes.
So Rain, it's been fantastic having you on the show.
Thank you.
We'll
It's
be
an
seeing
honor.
a lot more of each other as co-hosts for this show.
Absolutely.
So how do people get in touch with yourself and me in terms of the Mortgage Busters show?
Actually, it's very simple to get in touch with us, Greg. And all the viewers have to do is call 1-300 TMB show. That's 1-300-862-7466.
Again?
And the number again is 1-300-862-7466.
And the website?
The website is tmbshow.com.au.
Wonderful show, and we'll see you again next week.
Absolutely.
So you've been watching the Mortgage Busters show, and we'll be seeing you again next week.